The United States is printing an enormous amount of money. Do you also believe this can go on forever? Can money really be printed endlessly with no backing at all? Economic experts go on television and say everything is under control. Politicians promise growth. We've heard this story before, many times, and every single time it ended the same way. This video is not just about what money printing does to a country. It's about what happens to those who are caught unprepared. In the 3rd century AD, the Roman Empire had a problem. As the empire expanded, army wages increased, luxury consumption exploded, but the treasury was empty. The solution? Dilute silver coins with more copper. At first, Roman coins were about 95% silver. By the end of the century, that number had dropped to 5%. Did people notice? Of course they did. Prices skyrocketed. Did the empire collapse immediately? No, but the foundations of its collapse were laid with those silver coins. Does this sound familiar? In 1923, in Weimar, Germany, you needed a wheelbarrow full of paper money just to buy a loaf of bread. How did it happen? War reparations after World War I, economic devastation, and the government decision: print money. At first, it worked. Unemployment fell, production increased. Then prices started rising. Then they rose faster. Then they spiraled out of control. Eventually, money turned into worthless paper, and the conditions were set for Adolf Hitler's rise to power. But today is different, you might say. We have central banks, we have economists, the system is more advanced. Is it really? In 1929, the New York Stock Exchange collapsed. Everyone believed that they were going to get rich. Stocks would rise forever. Credit was easy, confidence was absolute. Then, one day, it didn't work. The Great Depression began. It lasted for decades. An entire generation was lost. In 2008, the same story played out again, this time in the housing market. They said housing prices never fall. Banks were giving one person 5 mortgages. Risk? What risk? Then the system cracked. What happened next? Millions of people lost their homes. And the banks, they were rescued. With your taxes, with my taxes. Now it's 2026. The US Federal Reserve's balance sheet is at an all-time high. Public debt is measured in trillions of dollars. And yet, no one panics because everyone repeats the same line. The US is different. The US can print money. The US can borrow endlessly. Is it really different? Money is not a tool, it's a weapon. Stop thinking of money as just a medium of exchange, because that's not what it really is. Money is a tool of control, a weapon of power. And if you control the power to print money, you don't just control the economy, you control people. Think about it. If you had the authority to print unlimited money, what would you do? First, you'd pay off your own debts, then your friends' debts. Then you'd fund whatever projects you wanted. And most importantly, you'd silence your opposition. Because without money, no movement can survive. The United States understood this perfectly. After World War II, the Bretton Woods Agreement established a global rule. The dollar was as good as gold. Countries would hold reserves in dollars. Oil, gold, grain, everything would be traded in dollars. And the US? It would simply print paper. When Nixon abandoned the gold standard in 1971, the world was shocked. But the system didn't collapse. Why? Because by then, everyone was dependent on the dollar. Oil companies, central banks, governments, and the US knew it and used it. Here is the critical truth. Inflation is a silent tax. When a government raises taxes, people protest. Elections are lost. But when it prints money and creates inflation, no one understands what's happening. You just notice that everything is getting more expensive. Your salary stays the same, your purchasing power falls. Does a tax bill arrive? No. but you still pay. And worse, who pays the most? The poor, the middle class, wage earners. And the rich? Their assets rise with inflation. Real estate, stocks, gold. But you only have a salary, and it quietly erodes. Wars are no longer won on battlefields. They're won on balance sheets. You don't need bombs to punish Russia. Just remove it from SWIFT. You don't need to invade a country. Just trap it in debt. And who controls this system? Those who print the money. Is the US really different? Every empire believes it's exceptional. Rome thought it would last forever. The Ottoman Empire thought the same. The British Empire ruled a world where the sun never set. And then it fell. But the US does have one unique advantage. The dollar is still the world reserve currency. What does that mean? When Brazil prints money, it creates inflation. When Turkey prints money, the lira collapses. But when the US prints money, it exports inflation to the rest of the world. How? Because nearly 80% of global trade is conducted in dollars. A Chinese company sells goods to a Brazilian firm. What currency do they use? The dollar. Saudi Arabia sells oil? Dollars. Europe buys energy? Dollars. So when the US prints money, it doesn't just inflate its own economy, it inflates the entire world. The cost is shared globally. The benefits are concentrated in the US. Can this last forever? The petrodollar system. In the 1970s, the US struck a deal with Saudi Arabia. All oil sales would be priced in dollars. In return, the US would guarantee the Saudi regime security. From that moment on, the dollar wasn't just money, it became a survival tool. But things are changing. China is buying oil in yuan. Russia is moving away from the dollar. BRICS countries are building alternative payment systems. Slowly but steadily, the world is showing that it's tired of playing by US rules. And the US knows this. That's why every threat, every challenger is crushed. When Libya's Gaddafi tried to create a gold-backed African currency, what happened? Regime change. When Iraq attempted to sell oil in euros, what happened? Invasion. When Venezuela tried to escape the dollar, what happened? Sanctions. The message is clear. This system will not change, because change is not allowed. But every system eventually breaks. History proves that. The only question is, when? Central banks independent referees or the owners of the game? We're taught that central banks are independent institutions, free from political pressure, focused solely on economic stability. The Federal Reserve, the European Central Bank, the British Bank, they all tell the same story. We are scientists. We follow data. We stay out of politics. Let's look at reality. In 2008, the financial system was collapsing due to banks' greed, recklessness, and fraud. Millions of people lost their jobs, homes, and savings. Were banks allowed to fail? No, they were rescued. The Federal Reserve printed trillions of dollars to clean their balance sheets. They were too big to fail. And ordinary citizens? Nothing. Lost your home? That's your problem. Lost your job? Sorry, that's the market. Here's the core truth. Profits are privatized, losses are socialized. Banks win, you're irrelevant. Banks lose, you pay. And central banks orchestrate this game. They set interest rates, they decide which assets are purchased. Their decisions shape millions of lives. Yet no one elects them. No one holds them accountable. Did you vote for the Fed chair? No. Who appointed them? Politicians and bankers. Who do they answer to? The same people. After 2008, millions of homes were foreclosed. At the same time, asset prices exploded. Why? Because central banks flooded markets with cheap money. Who benefited? Asset owners. Who didn't? Wage earners. That's why the wealth gap has exploded over the last 15 years. Not by accident, by design. Are crises natural disasters or tools? Economics textbooks say business cycles are natural. Expansion, peak, recession, bottom. Normal. Inevitable. But is that true? Financial crises aren't earthquakes. They're not random. They emerge from incentives, risks, and conflicts embedded in the system. In 1929, people bought stocks with borrowed money. Why? Because banks made credit easy. Why? Because profits were high. Risk belonged to someone else until the system collapsed. Afterwards, large players absorbed smaller ones. Assets became cheap. The strong accumulated more. Crises are moments of wealth transfer. The same in 2008. Millions lost their homes. Then firms like BlackRock bought them. Today,